Good day, this is Leadership TV News. I am Cynthia Onado. Some financial and economic experts have advised the Monetary Policy Committee (MPC) of the Central Bank of Nigeria (CBN) to retain the lending rate of 24.75%. The experts who advised in separate interviews with the News Agency of Nigeria in Abuja spoke against the backdrop of the MPC meeting scheduled for Monday and Tuesday. A renowned economist, Professor Ken Ife, said that the seeming success of aggressive tightening in the last two meetings might propel the committee to further tighten the rates. Ife, lead consultant on private sector development to the ECOWAS Commission, however, advised the committee to retain the prevailing rates. They might want to increase it. The worst case scenario is for them to retain. This is because the policy is working to tighten the grip on inflation. It is yielding results. Even though relative to last year, inflation is increasing, when you look at month-on-month inflation, all the five inflation indices are decreasing. Headline inflation, which is the composite price index, food basket index, core inflation, urban inflation, and rural inflation. They all went up in the last 12 months, but month-on-month between March and April, they all started going down. So, the aggressive tightening is working, but it needs more time for the growth to become significant and reflect on the next month, he said. Another economist and past president of the Abuja Chamber of Commerce and Industry, ACCI, Dr. Chijioke Ekechukwu, also urged the MPC to halt further tightening of the lending rate. At the inception of the new MPC, it has been about tightening. Tightening became necessary because of the amount of money in circulation which needed to be mopped up. This has resulted in a high MPR, which has equally led to a high interest rate in the financial sector. Having reached this far, instead of tightening further, they should hold on to the existing rates to be able to see the impact of the tightening that has been done already. The more tightening that we have, the more the inflation rate. Today, there is a positive correlation between high MPR and high inflation rate, he said. Uche Uwaleke, a professor of capital markets and president of Capital Market Academics of Nigeria, urged the MPC to retain the prevailing rates to mitigate the impact of its aggressive policy tightening on Nigerians. For more of our news stories, you can log on to our website www.leadership.ng. Many thanks for watching.
Thank you for watching. For sponsorship and advert placements, please contact 08036886158. Last Word Leadership Podcast Studio. You have the last word.